You know that feeling, right? Just completely swamped, looking at emails piling up, or maybe a stack of reports, just data everywhere. And you're just wishing, can I just hit fast forward?
Oh, absolutely. Like a
Oh,
shortcut through all the noise to get to what actually counts.
exactly. And if you feel that way, well, you're definitely not alone. We're all swimming in data these days, aren't we?
Hmm.
And being able to quickly figure out what it means, understand the implications, and then, actually use it effectively, that's becoming like a superpower.
It really is a crucial skill.
So today we're going to do a deep dive into this very challenge, but we're looking at it through a lens that might surprise you, actually.
Yeah.
The world of accountancy.
Right. Not always the first field people think of when it comes to radical change.
No, but we're going to explore how technology, and specifically automation, isn't just tweaking things, it's fundamentally reshaping this, well, ancient profession.
And opening up completely new ways to create real value.
Exactly. So let's peel back the layers and really understand this whole evolution.
And we've got some really great source material to guide us, particularly an article called Automation in Accountancy and the Creation of Value by Stephen Osborne. It's from SEMA E1 for those interested.
Okay.
And our mission here really is to get past the jargon, past maybe some preconceptions you might have about accounting.
Yeah, like the dusty ledgers image.
Right. We want to show not just what's changing, because things are definitely changing, but more importantly, why it matters.
Why it matters to everyone, not just accountants.
Exactly. Businesses, small and large, individuals thinking about their careers. Really, anyone who wants to understand how knowledge gets, well, generated and used in this digital age.
Mm.
We'll look at the history, the tech breakthroughs, and really dig into what it all means for, making better decisions.
Okay, so let's start with the basics then. What exactly are we talking about when we say process automation in accounting? Because it sounds potentially complicated.
Well, at its simplest, it just means a system doing routine stuff without a person having to step in every time.
Right, like I can picture a robot arm on a car assembly line, welding or something. That's easy to visualize.
Exactly. Tangible, repetitive. But then you think about accounting.
Yeah, accounting feels so
Yeah.
human dependent, doesn't it? All that judgment, experience, interpreting the numbers. Where does a robot even fit into that picture? It seems almost contradictory.
It really does seem counterintuitive at first glance, and that's where a lot of the common misunderstanding comes in.
Okay.
What's fascinating here is how that first impression can kind of lead you down the wrong path.
How so?
Well, many people, maybe even some accountants themselves, their first thought is, look, this job needs knowledge, experience, skill. Technology can't just take over.
Right. Especially the complex advice part.
Exactly. If you're
Hmm.
talking about high-level strategic advice, complex tax stuff, interpreting tricky regulations, yeah, human brains are still absolutely essential there, no question.
Okay.
But, and this is the key thing, that view often focuses too much on the final output, the report, the advice.
And not the process behind it.
Precisely. It overlooks the foundational process of actually gathering the information, preparing it, checking it. That's where the work often is.
Ah, I see. The groundwork.
Yes. And it's within those often repetitive information handling steps that technology isn't just helpful, it's a game changer.
So automation can help accountants add more value.
Absolutely. It really empowers them, but maybe not in that direct robot replaces human way you might initially think.
So it's not about replacing the brain.
No, it's about automating the stuff that feeds the brain, the tedious bits, the repetitive tasks. That frees up the accountant to do the more impactful, human-centric strategic work.
Okay, so it elevates the role rather than eliminating it?
That's the core idea, yes.
Yeah.
Elevating, not diminishing.
That makes sense. And to really get how big a shift this is, we probably need to step back in time a bit, right?
Definitely. A historical perspective is crucial here. We need to go way back.
How far back are we talking?
Think 15th century. There was a Franciscan friar, Luca Pacioli. He was actually a contemporary of Leonardo da Vinci.
Wow, okay. And he's important because...
He's the one generally credited with documenting and really popularizing double-entry bookkeeping, debits and credits.
the foundation of modern accounting.
Exactly. And here's the amazing thing. For centuries after Pacioli, accounting was almost entirely manual.
Just pen and paper.
Pretty much.
Sure.
Picture these huge, heavy ledger books. Accountants painstakingly writing down every single transaction by hand.
Every penny in, every penny out.
Recording sales, purchases, everything. It let early traders track their basics, cash, stock, who owed them money, but that was kind of it.
That sounds incredibly laborious.
Oh, it was. Just imagine the sheer effort. Copying everything out, making sure the ink didn't smudge, balancing columns.
And you said this lasted for centuries.
Fundamentally unchanged, really, right up until the mid-20th century, which is kind of mind-blowing when you think about it.
Especially with things like the Industrial Revolution happening. Businesses got way more complex then, right?
Massively more complex, and the need for better, faster financial information just exploded. But they were still trying to pull it out of these handwritten books.
Which must have been a nightmare. Slow, error-prone.
Totally. Imagine trying to create detailed reports quickly from that.
Yeah.
And the errors. One wrong number, and you could spend days hunting it down. It was a real bottleneck.
Yeah, I can see that.
The Industrial Revolution really just highlighted how inefficient that manual system had become. It just couldn't keep up.
So then computers arrived, mid-20th century.
Exactly. That starts a new chapter. But it wasn't like flicking a switch for accounting. It was more gradual.
Okay.
Initially, it was mainly the really big organizations, the huge companies, government departments, the ones who could actually afford these massive, expensive room-sized computers.
Right, the early mainframes.
They start using them to record transactions, basically turning the paper ledgers into digital databases on like magnetic tapes or punch cards.
So still data entry, but stored electronically.
Yes. And the big win was they could then generate basic reports, financial statements, much faster than before. That was a big step, getting information to managers more quickly.
But someone still had to type everything in.
Oh, absolutely. That's crucial. The input was still manual. An accountant, or maybe a dedicated data entry person sitting there typing it all in, using a keyboard, maybe punch cards early on.
So the main benefit wasn't removing the human input, but speed.
Speed was definitely one. Typing is just faster than handwriting, right?
Sure.
And the other big one was fewer errors, because you could build checks into the system.
Ah, like forcing debits and credits to match.
Exactly. The system wouldn't let you post a transaction if it didn't balance. It would flag it right away. That was huge compared to finding mistakes weeks later in a paper ledger.
Okay, so big companies start getting faster, more accurate info. What about smaller businesses?
Well, that's where this technological gap really opened up. While the big players were leveraging these systems for better management info, smaller businesses, local shops, sole traders, they were mostly left behind.
Still using paper.
Many were, yeah.
Yeah.
Well into the 1980s, even the 90s. Some maybe started using basic spreadsheets later on, but often just for tax returns or statutory accounts.
Not really for day-to-day decision-making?
Rarely.
Yeah.
They just didn't have those real-time insights the bigger competitors were starting to get, which, raises a big question.
What happens when access to that kind of crucial business information is so uneven?
Right. It creates a massive competitive disadvantage. It's hard to compete when you're essentially flying blind compared to others who have detailed data.
And even accounting firms themselves weren't all cutting edge back then.
No, not at all. Even in the early 90s, many firms were still pretty basic technologically.
Yeah.
They might have had software to produce the final accounts for clients.
But getting the data into the software was still manual.
Often, yes. Typing in trial balances, journal entries, often from paper records the client dropped off.
Wow.
And for smaller clients, especially sole traders, many firms were still using paper analysis pads.
What are those exactly? Like giant spreadsheets on paper.
Pretty much. Imagine huge sheets, sometimes really long with rows and columns printed on them. You'd write in all the numbers by hand, categorize things, total them up in the right-hand column.
Sounds incredibly painstaking and error-prone again.
Hugely laborious, time-consuming, and yes, very easy to make mistakes. It just highlights how deeply embedded that manual way of working was, even just, 30 years ago or so. It was the recent reality for many.
Okay, that historical context really paints a picture. It shows how stuck things were for so long. But then, moving into the 2000s, things started to fundamentally change.
Yes, the real catalysts emerged. Our source material singles out two massive developments.
Which were?
First, big leaps in communications technology. Second, the arrival of cloud computing.
Ah, the cloud. Okay.
Both really started getting traction in the early 2000s and then just took off, especially from around 2005 onwards.
And this is where it gets really interesting for automation, right?
Absolutely. This is where the potential was truly unlocked.
So communications tech, we're talking internet, mobile.
Exactly. The internet was around in the late 90s, of course, but it wasn't fast enough or reliable enough for what accounting automation needed.
Right. Dial-up modems weren't going to cut it for big data files.
Not a chance. Transferring large amounts of financial data was just too slow, too clunky. But
Yeah.
then came widespread broadband.
Okay, that made a
A
difference.
huge difference. And then 3G mobile technology, that combination really just, it exploded our ability to share data quickly,
Remove the bottleneck.
completely. And it just kept accelerating. Fast fiber, 4G, now 5G. Data transfer became almost instant, always on, from anywhere.
We kind of take it for granted now.
We do. But for accounting automation, that reliable high-speed communication was the absolute missing link. It made things possible that were just science fiction before.
And then the second piece was the cloud. How did that fit in?
Well, better communications directly enabled the cloud, really,
Right.
because we could now reliably connect to systems anywhere.
So instead of software on your own computer?
Right. Businesses and individuals could start storing their data centrally, securely, in these massive data centers, the cloud. And they could access software, including accounting software, over the internet from anywhere,
So no more installing programs from a CD.
pretty much. And your data wasn't stuck on one machine's hard drive. It was accessible wherever you had an internet connection.
Which must have huge implications for sharing information.
Transformative implications.
Mhm.
The ability to share data quickly and automatically was the direct result.
No more emailing files back and forth or using USB sticks.
Exactly. Multiple people, the accountant, the business owner, maybe the sales team, could all look at the same up-to-date financial information at the same time from different places. Real-time collaboration became possible.
And cloud systems could talk to each other more easily.
Yes, integration became much simpler. Connecting your accounting software to your bank or your e-commerce platform or your inventory system, it created this whole interconnected ecosystem.
So connecting this to the bigger picture, it's not just convenience.
No, it's much bigger than that. It fundamentally broke down those old geographical barriers, those infrastructure barriers to accessing information.
Turning accounting from something done in one office into something global, collaborative.
And automated. That combination, fast communications and the cloud, was the launch pad. It provided the highway and the central hub needed for modern process automation in accounting.
Okay, so you've got these two massive forces converging. The cloud, giving you central data, remote access collaboration, and super fast communications linking everything up. You can really see how that created, as you said, the perfect environment for automation and accounting to just take off.
Exactly. And the software developers saw it too.
The big names like Sage and Xero.
Yes, them, but also loads of newer, innovative companies. They jumped on this opportunity, designing cloud-based accounting software specifically built to make everything much more efficient.
Bookkeeping, reporting, compliance, making it easier and more accessible.
Infinitely more efficient, more accurate, and more accessible than the old ways.
So what are some specific examples? How did automation actually start changing the day-to-day work?
Well, one of the biggest ones, and a huge time saver, is the automatic recording of bank transactions.
Instead of manually typing in every line from a bank statement?
Precisely. That used to take hours and hours. Now the software connects directly and securely to the business's bank account.
Okay, like a direct feed.
Yeah, an
Ah.
encrypted feed. It pulls in transactions automatically, usually every day. And here's the really clever bit.
There's AI involved.
There is, yeah. It uses machine learning, a form of AI. The system learns how you categorize things.
So if I always pay my rent to landlord properties,
The system sees that pattern. Next time a payment to landlord properties comes through the bank feed, it'll suggest or maybe even automatically assign it to your rent expense account.
okay.
Oh.
It learns from past behavior.
Exactly. Same for income. If money comes in from client A, it suggests sales revenue. It drastically cuts down the manual coding work.
And it reduces errors from typos too, I guess.
Definitely. And it almost eliminates those tedious bank reconciliations that used to be such a chore. The system flags anything it doesn't recognize or anything that looks unusual, but the bulk of it gets handled automatically.
That's huge. What else? Invoices.
Invoices, too. Instead of getting paper invoices and typing them all in, now you have tools that can read them.
Even if they're PDFs or scanned documents.
Yes, using OCR optical character recognition. The software reads the vendor name, invoice number, amount, all the key details.
And puts it straight into the accounting system.
Yep. It can even try to match it to a purchase order if you use those.
Yeah.
If there's a mismatch or something looks odd, it flags it for a human to check.
Mm.
But again, huge time saving, fewer errors.
Okay, so data entry is heavily automated. What about reports?
That's the other big area. Once the data's in and categorized mostly automatically, generating reports is incredibly fast.
Like the trial balance?
The system pulls the trial balance, the summary of all accounts, directly into preset report templates.
So things like the official financial statements, the balance sheet, income statement.
Yep, the ones you need for filing or internal
Yeah.
management accounts for decision-making. What used to take hours or even days of manually putting numbers into spreadsheets can now often be done with just a few clicks.
Wow, so this isn't just a small tweak.
Not at all. It's a fundamental shift. The really time-consuming part, gathering the data, coding it, summarizing it, that's now largely done by the system. It's revolutionary, honestly.
Okay, that is a massive change. So, if the system's doing all that recording transactions, using AI to categorize, pulling reports together, what's left for the accountant? What do they actually do now?
That's the million-dollar question, isn't it? And the answer is their role has fundamentally shifted.
From recorder and drafter.
Exactly. From being the person doing the recording and drafting the reports from scratch, they become more like the manager of the software, the overseer of the system.
And the architect of the information flow.
Yeah, that's a good way to put it. They're ensuring the whole system works correctly and produces reliable information.
So it sounds less like being a doer of the routine stuff and more like a quality controller and maybe a strategist for the information itself.
Precisely. That captures it well. Their tasks now require a different kind of expertise.
Like what specifically?
Well, instead of data entry, they're reviewing how the system handled new or unusual transactions. Did the AI get it right? Does the system need tweaking?
So training the AI in a way.
Sort of, yeah. And they're constantly checking that the output, the information the system generates, is accurate and makes sense. They're the guardians of data integrity.
Okay.
They're also the ones setting up and customizing those report templates, making sure the reports give the client or the boss exactly what they need.
Not just a standard report, but something tailored.
Right. Maybe a specific cash flow forecast for a startup or a detailed cost analysis for one department in a larger company.
So ensuring the reports actually lead to useful insights.
Exactly. Making sure the information isn't just accurate, but that it actually helps someone make a better decision. It's a complete shift in focus.
Right, a shift towards higher level tasks.
And to really understand where the value lies now, that framework you mentioned is really helpful.
The one from the Farrar white paper, Reinventing Finance for a Digital World.
That's the one, the Information to Impact Framework. It breaks down the accountant's work into 5 core activities. It really clarifies where automation fits in.
Okay, let's hear them.
So first is assembling information. That's the basic data gathering, the raw numbers.
The bit automation is really good at now.
Exactly. Then second, analyzing for insights, looking for the patterns, the trends, what the data actually means.
Okay.
Third is advising to influence, using those insights to guide decisions, recommend actions.
Making the information actionable.
Right. Fourth is applying for impact, putting the advice into action, implementing strategies, seeing the results.
Getting things done.
Yep. And the fifth is acumen. This is the broader stuff. The professional knowledge, judgment, ethics, strategic thinking that underpins everything else. The wisdom part, if you like.
That's a really clear framework. And it makes it obvious where automation has had the biggest impact.
Absolutely. It's overwhelmingly hit that first activity,
Yeah.
assembling information.
The computer does the heavy lifting there now, collating data, putting it in reports.
With the accountant mainly checking the output, making sure it's right.
So with all that time freed up from assembly, what does this mean for creating value?
It means everything. Because automation has slashed the time needed for assembly, it allows accountants to shift their focus.
To the other activities.
Mm,
Analyzing, advising, applying.
exactly. And those are the activities that create the most genuine, significant value for a business or a client.
Right, because just having a report isn't enough on its own.
Precisely. A profit and loss statement is essential, yes, but its real power comes when you analyze it.
Find out why the profit is what it is or where costs are changing.
Finding patterns, risks, opportunities, gleaning insights that actually help the business become more profitable or more efficient or grow smarter. That's where the real value lies. The report is just the starting point.
It makes you think, all that time spent manually writing in ledgers and correcting errors in the past.
You could argue, maybe controversially, that that specific manual labor created almost no direct value for the client.
How do you mean?
Well, the client wasn't paying for the act of writing or the hours spent finding a mistake. They were paying for the information, the accurate financial picture, and more importantly, the insights from that picture.
So the manual work was just a necessary evil to get to the valuable part.
Exactly. An unavoidable cost back then. Automation just makes getting that initial snapshot incredibly efficient.
Freeing up the human brain for the stuff that really matters.
Yes, interpretation, strategic advice, foresight. It elevates the accountant from just a record keeper to a proper strategic partner. It's about focusing their unique human skills, judgment, creativity, understanding nuance where they make the biggest difference.
The opportunity cost of all that old manual work must have been huge.
Enormous. Automation basically unlocks all that previously tracked potential.
Okay, so this shift in where value is created, it must have some very real consequences for clients, right? Especially those using accountants in
Oh,
practice.
definitely. Think about how fees used to work.
Mostly charged by the hour.
Almost always. And a huge chunk of that time, and therefore the fee, was spent on that low-value assembler work we just talked about. Data entry, reconciliations, basic report prep.
So clients were paying heavily for the manual grind.
Essentially, yes.
Yeah.
But now, post-automation, clients have much better options.
Like lower fees.
That's one possibility for sure. If all you need is basic compliance work, the accountant spends way less time on it now, so the fee can be smaller. Direct cost saving for the client.
Okay, that makes sense. What's the alternative?
The alternative, and maybe the more powerful option, is that for a similar fee to what they paid before, the accountant can use all that time saved by automation differently.
To do the higher value stuff.
Exactly. To really dig into the client's numbers, understand the business, and provide proactive, actionable advice.
Help them actually improve their business performance.
Right. Things like better cash flow forecasting, finding ways to cut costs, optimizing tax, advising on pricing, maybe even guiding expansion plans. Real strategic input.
So the client gets a choice. Cheaper compliance, or keep the fee similar, but get much smarter, more strategic advice.
That's it. Either way, it's more efficient and potentially much more valuable. It's a win-win, really. Cheaper or smarter, driven by efficiency.
That's a great outcome for clients. Are there other big consequences?
Yes, there's another really significant one, maybe even more profound in some ways.
Oh.
It's about leveling up the playing field between big companies and smaller ones.
Closing that technological gap you mentioned earlier.
Precisely. Remember how large corporations used to have exclusive access to sophisticated systems and real-time data, giving them a huge edge?
While smaller businesses were stuck with manual methods or basic tools, flying blind, you said.
Right, well, cloud accounting changes that dramatically. These systems are now incredibly affordable.
Accessible even for a sole trader or a small startup.
Absolutely. For a relatively low monthly subscription, even the smallest business can now access high-quality management information.
The same kind of detailed reporting, automated processing, quick insights.
Yes, the same ability to generate reports quickly, maybe even use forecasting tools, things that used to be the exclusive domain of big companies with big IT budgets.
So it's democratizing business intelligence.
That's a perfect way to describe it. It gives smaller organizations a much better, much fairer chance to compete. They can make faster, smarter decisions based on actual data, just like their larger rivals.
Decisions about pricing, inventory, marketing, growth.
Everything. It helps them compete more effectively. This is truly transformative. It breaks down old barriers and fosters a more level, more competitive business environment for everyone. It empowers entrepreneurship. Hashtag, tag, outro.
Wow. What a journey that was, looking at accountancy's evolution. From those 15th century handwritten ledgers lasting for centuries.
Hard to believe, isn't it?
Right. To the early computers bringing speed, but still needing manual input, creating that gap. And now, here we are, automation handling the routine stuff, freeing up people. And the key takeaway really seems clear. It's not about accountants being replaced. It's about their role being fundamentally transformed.
Elevated, really.
Yeah, elevated from essential but maybe lower value record keeping to being strategic partners, focusing human skills on analysis, advice, acumen.
Using their judgment where it counts most. It's a powerful story of technology enabling human potential.
It really is. Efficiency driving higher value.
Indeed. And it forces you to think, doesn't it? If automation handles the assembly and maybe even starts doing some basic analysis, what's next?
What are the new skills, the new areas of acumen that will really set accountants apart in the future?
Exactly. And how might this push the boundaries? Will the lines blur even more between accounting and other strategic roles? Could we see entirely new finance specializations emerge that we haven't even thought of yet?
That is a fascinating thought to end on. And it's not just about accounting, is it?
Not at all. The same forces are at play everywhere.
So a question for you, our listener. How might this shift, routine tasks getting automated, be playing out in your field, your industry?
Mm.
How do you or how does your organization find that balance? The balance between leveraging technology for efficiency and nurturing that unique, irreplaceable value of human insight, human creativity, and strategic thinking.
Something definitely worth pondering as we all navigate this constantly changing world.